Well, g'day traders, and I think cast my mind back to Monday when I was talking about the idea that we were seeing this consistent beating of US data. If you have a look at the chart of the Citigroup Economic Surprise Index, this goes up effectively when US data is beating the consensus, and that number had been rising up. You can see it's now rolled over, and that really sort of stems down to global manufacturing and specifically the ISM manufacturing number. Now, manufacturing is 11% of the US GDP, but the market has shown just how sensitive to that data release they are. They are with global manufacturing. You could add in other variables that we've been seeing, the tariffs, the 7.5 billion euros of tariffs that have been placed on various commodities of Europe, things like French wine, spirits, and other areas in relation to the retaliation to the subsidies they put on Airbus there. But the market has been dealt with a plethora of bad news, mostly on the economic side of things, and people are saying, well, actually, is everything looking as rosy as we thought? And I think that's what people are looking now. They're looking through the looking glass. They're saying, we don't necessarily like what we see, and there's a lot of questions that need answers to that situation. I think you've seen that higher volatility playing through. You've seen that in the VIX index putting above 20%. That's caused some risk aversion. People have therefore gone to cash. If you've obviously seen that big meltdown in European equity markets last night, the FTSE down by the most, I think, since 2016. That had an over 4 sigma move. DAX down 2.8%. If you have a look at our European opening calls based on what we've been seeing today, you can see Germany down 22 points, the FTSE down 17 points. So don't be surprised if we saw a little bit of buying coming towards the European Open. Our opening calls as is stand right now for Wall Street and the S&P are fairly flat, but obviously the reaction we've seen in equity markets across Asia have been somewhat pretty poor, mostly down around sort of 2%. The ASX 200 down 132 points, or 1.9% or 2% in that situation. Most of the selling in financials, that's where the points have been taken out. The financial sector here in Australia down 2.1%. We've seen materials and energy under pressure. Obviously the energy price there, or the oil price under pressure, because we saw that inventory build. 3.1 million barrels on the inventory build there. The market was looking for 1.5, so it was bigger than expected. And of course, when you've got this sort of growth concerns playing through, you're going to see oil prices under pressure. You can see oil up a bit at the moment, and of course the gold price is just holding that $1,500 mark. I put an article out at the beginning of the week talking about gold and the sort of two ways, the positives and the negatives. And one of the questions we asked was, is everything still really good? And obviously that question has been answered for us at the moment. Clearly the market had got a little bit excited that things were getting better. And obviously what we've seen now is a rollover in real yield. Real yields have been coming off, and that's allowed us to go and buy gold again, and we're pushing back up to 1,500. I will say though, because people are getting a bit concerned about what they're seeing, that could be met quite easily tonight when we do have the services ISM numbers coming out of the US. The market's looking for that to slow down a little bit from around 56 to 55. Obviously, if we see that coming out, say 53 on that index, that will just compound the concerns we've been seeing, and people will look, to go and buy and go into treasury markets. We're going to see implied volatility kick up and risk aversion coming through in equity markets, and certainly gold getting that extra leg up above $1,500. But $1,500. But I think if you do get a number, say 56, 57 on that index, you could see a period of calm, some of the short covering coming through in the markets as well. So I think that's really interesting. We are in this bit where people are looking at global growth, and I think people are very sensitive to these economic releases. On the Fed side, though, we don't have a huge amount of Fed speakers tonight. I think what we do have is when tomorrow, when Asia kicks in tomorrow, we've got Richard Clarida, the Vice Chair, speaking at 8:30 or 35 minutes past 8. He's the architect, I think, of Fed policy. He's probably the most important person on the Fed board. The markets really respect this guy, so I think we do want to have a look at what he's saying, because now we've got an over 70% chance the Fed cuts rate in October, and I think he's going to have a good chance to really guide us and just give us a sense of what he's seeing on the ground in that situation as well. Currency markets, well, you're not seeing too much of a reaction. They're fairly flat on the day. They're just in the sort of holding reactionary period. We've seen a bit of activity in cable. People have been looking at the idea that Boris Johnson has laid out his plans to the EU. The Irish are not overly happy by what they've been seeing, but I think people are interested. The idea that Jean-Claude Juncker has said, this is probably a good starting point, and they've probably gone above and beyond. Cable just holding that 123 level at the moment, seeing some volatility coming through there. But certainly, one thing we're looking. Dollar yen, you can see that trading 107.17, down about 5 pips on the day. That's going to be one of the most sensitive to the yield plays we've been seeing in the Treasury market. Again, we've got our eyes firmly on that services ISM number ahead of tomorrow's non-farm payrolls.